Hi, this is Lex, and welcome to the FinTech Blueprint. It's your podcast about fintech, decentralized finance, digital banking, investing, robo-advice, artificial intelligence, and all the other frontier technology that is transforming financial services. To get more content, like an illustrated transcript of this conversation in your inbox, subscribe at fintechblueprint.com. So without further delay, let's jump into today's episode.
Hi, everybody, and welcome to today's conversation. I'm absolutely thrilled to have with us Arik Shtilman, who is the CEO at Rapyd, one of the leading and most innovative payments companies in the world. So I'm really excited to talk to him about Rapyd. Arik also has a career of entrepreneurship and building businesses. So all of his secrets to launching and selling successful companies, I'm really excited to learn as well. With that, Arik, welcome to the conversation.
Thank you very much for having me.
My pleasure. Let's start off with how you got into technology and into financial services. It seems that you had a very steep learning curve and experience off the bat, like you had a big experience to start. Can you tell us about that?
Yeah, sure. So first of all, I've been in tech from the age of 4 pretty much. So in 1984, my mother worked for IBM. We got our first computer at home where nobody actually knew what a computer is. And then in the early 90s, I actually got connection to the internet for the first time because my father was a university professor and the internet started as, a network between universities. So I started my tech career like very early, learning to write code, in the early stage programming languages. And from there, I understood very quickly, at the end of the 90s that, I want to be in tech and I want to build things that are related to technology. And I actually founded my first company in 2002 at the age of 22 after I was released from the Israeli military. It was actually a company in the unified communication and cloud computing space. And I built this company for 10 years up until 2013, where I sold it to a company out of the US called Avaya, which used to be one of the biggest unified communication companies on planet Earth.
What is unified communications?
Unified communication is what actually everybody takes for granted today, which is basically voice over IP. The ability to do even this podcast and record it through a browser or to call somebody on WhatsApp calling, these things did not exist, right? It's something that started only in the beginning of 2000s, the connectivity between networks that used to be used only to transfer data and information for computers, they started to be used for voice and phone calls. So basically the world was very digital, or analog even in the early stages, and it was not really voice over IP based. And my company was one of the first companies that basically enabled to do a lot of these internet-based call centers and phone calls.
2002, 2004, there's not a lot of bandwidth going around. People are still on dial-up or maybe DSL. What gave you the idea to build this company and kind of the confidence to say, we can get around the technical barriers?
So actually, when we started, it was even before the problems with the bandwidth. We started because we saw a need that almost every company back then in the beginning of 2000 understood that they need a customer support center that receives phone calls, right? That was like the thing that boomed. Everybody needed a call center. Doesn't matter if you're an insurance company, a bank, or you're selling something. You need to allow people to call you because back then there was like no email, no WhatsApp, no whatever for communication with customer support. It's only phone calls. And we started to basically develop different types of softwares to help either agents that work in call centers or managers to track how the activity in these type of call centers work. And then at like 2005, 2006, people understood that they need to have agents that speak multiple languages because a lot of time the clients don't speak only in a specific language. And this is the time where basically remote working started. So people were looking for agents that can take phone calls that sit in different countries. And this is when voice over IP and connecting, somebody that sits in another country to the same group of people that are sitting, for example, in the US or in Europe started. And, there were a lot of challenges back then with the networks and with connectivities. But this is how at least the idea evolved.
So there's an interesting thread there that might connect to Rapyd in a little bit, which is this global nature of business. How many different geographies did you cover? Like, in how many different geographies did you have clients? And then in how many different geographies did you have agents? And how did you set that up?
So let's start with the fact that as an Israeli entrepreneur, everything that you do is global because Israel is a very small company located in the Middle East. And, if you want to build a business that is a little bit medium or large size, you have to go out of the country. So for us, building global is by definition, like if I go to the US, it's already global for me. So that was the idea of trying to go global. Started, of course, from the fact that we wanted to build something that is bigger than the domestic market here in Israel. And then you go basically to Europe, to European Union countries where you have multi-language by definition, because every country in the European Union is pretty much a different language. And after that, you expand to Latin America and to other places that are a little bit lower cost because people had a need, of course, to control the cost of the business. And that's how very, very slowly it expanded, across the globe.
What happened next after that experience?
Well, after that, I sold basically the company, and then I was looking, for the next venture. So me and my co-founders, we were looking at what is the next big thing we wanted to do. We actually decided to try and go into consumer financial services in 2015. So the idea was not to start Rapyd like people know Rapyd today, which is a B2B payments company or fintech company, depending how you want to call it. But we actually tried to go into the consumer payment space in 2015. Now, we had no clue about financial services in 2015. The only connection that I had to financial services in 2015 is that I had a debit card, a credit card, and a bank account. But I didn't even understand how the world works. And, when you're trying to go into financial services and you don't understand how the world works, you stumble into every single problem that exists on planet Earth, from the fact that suddenly you need to deal with regulators, you have a compliance team, and you understand very quickly that technology is not going to win on its own because you need all the surroundings from a regulatory, legal, and compliance perspective. And, after a year and a half building a consumer-facing product in financial services, we looked around and we asked ourselves, how can it be that in 2016, 17, there are no platforms that provide companies the ability to build financial services at scale as a platform, as a service, like you have AWS to build data centers, or you have a lot of platforms in the internet, but in financial services, there is nothing. And every single company like ourselves that starts from scratch needs to build everything from the ground up. And we decided to pivot the idea into what Rapyd is today, which is what we call a fintech-as-a-service platform, a platform that enables other businesses to build on top of us financial services for consumers or businesses. And basically, if you want to build today the same consumer-facing financial services product that we wanted to build in 2015, you can build it on top of Rapyd in 3 weeks and operate in 100 countries across the globe. Where back then in 2015, it took us a year and a half to launch only the United Kingdom.
I want to push a little bit on a couple of those points. But before even getting to the platform conversation, I'm interested in what you described as your search process for the next business to build. Before you said, we're going to do B2C payments. What's your approach for evaluating opportunities? How did you look at the market? What ideas did you come up with, and how did you assess them?
Everything starts at the end of the day with a problem that you have personally. If you don't experience this problem personally, trying to go out and resolve the problem that you think somebody else has, it's doable, but at least for me, it's a little bit more challenging. And we had the idea at the beginning to go into this consumer payment space because every time that we had to do some kind of a cross-border payment, or anytime we traveled and we needed to use foreign currency, we stumbled into endless amount of problems with currency conversions, with fees, with payments that were delayed, money that nobody knows where it is because it's being sent through correspondent banks. And basically the lack of transparency of the financial system was something that, was not clear to us. So after suffering from it, we started to brainstorm, ended up on a whiteboarding session. And from there, we said, okay, we think that we can solve it, but let's see if it's a big enough market. And then you go and you do the research about, okay, how big your market is. And again, research is at the end of the day, these days is much easier because you have the internet and you have Google and you have endless amount of reports and documents. So you need to do the research of how big the market is. And only after you validate that the market is big enough and you have a pain point and you know how to resolve it, or at least you think you know how to resolve it, this is basically when you say, okay, fine, I'm going to try and do this.
I want to respond to kind of the insight you had, which was there wasn't a platform that helped other fintechs build their services. And I'd love for you to open that up because there were a lot of platforms that did things in the sector, right? So you had the beginnings of open banking with Simple and BBVA. You had Stripe with some of the payment processing capability, API first payment processing capability, DriveWealth for embedded trading, and companies like Envestnet. So I'm sure you saw those players, but you're saying that there still wasn't something that solved the problem that you were talking about.
It wasn't a platform because if you go back and see what we were trying to build in 2015, we were trying to build PayPal, right? And PayPal has a wallet, and PayPal KYCs or KYBs you as the wallet owner, and PayPal allows you to deposit money into a PayPal wallet, and PayPal allows you to do a P2P transfer between wallets, and PayPal allows you to transfer money to your bank account, and PayPal also allows you to issue a card to spend the money in the point of sale. Now, if you look at each and every one of these capabilities, in 2016, 17, there was not a single company that was a platform that enabled you to do all these different things as a service. You basically had to go to Stripe to do card acquiring. Then you had to go to Payoneer or Hyperwallet to do the disbursements to bank accounts. Then you needed to go to a Jumio or an Authentics or whatever it is to do the KYC. Then you needed to go to Marqeta to issue the card. Then you needed to go to Compliant Vantage to do the sanction screening. And it continues and goes on and on and on. And we ended up in 2015 and 16 integrating to 7 different companies just to launch one market, which was the UK. And it was clear for us that if we want to take this product and do it also in the US or in Singapore or in Brazil or in Mexico, we'll have to find probably 5-7 other companies to do it for that country. So there were no platforms. And this is what Rapyd does today. It is a platform. It allows you to do all these different things in all these different countries. And basically you just plug into it and you use what you need and in the countries that you want.
That sounds like a very big task. How did you go about breaking this task down into something that could be accomplished? Were you integrating lots of providers or were you vertically building? How did you approach the problem in the first place?
So in the first place, because you're a small startup with not a lot of money, you cannot build everything. So you're trying to partner with as many companies as possible and try to build some kind of an integrated API on top of a lot of different providers that you integrated with, because you also don't know which services will actually scale, which markets will work for you. But the goal was to build, at least for us, the biggest coverage that we can have of capabilities and countries, and to go to market with this as soon as possible. And then basically, when the first clients come in, you're starting to test the water. Then you realize that, okay, clients need more this jurisdiction or another jurisdiction. And then you're starting to build your own technical capabilities without the layers that you had in the past. And you go all the way down to the bare metal in the key markets. And, this is how you scale it later.
Who were some of the first customers and what did you learn there?
Uber was a very early stage client. And there we learned basically that the world of financial services, can be very complex. Like we work with them all over Latin America and in Asia in some countries. And, we provided them collection capabilities for consumers and disbursements of funds to the drivers and even card issuing for some of their other businesses that they had that are related to food delivery. So we actually learned extremely well the complexities behind running a gig economy platform. And it also gave us an insight in a very early stage in 2018 and 19 that the entire world is going to go into this process of embedded financial services in the way that, Apple does today, a savings account, and, everybody is trying one way or another to provide some kind of embedded financial services. We understood it already in 2018 and 19 because we saw the gig economy platforms like an Uber embedding it at the beginning because they wanted to enable the ride-hailing service and they needed to provide drivers capabilities or consumer capabilities. But at the end, they understood that instead of a cost center that they only need to pay money, they actually can make money from the financial services. And we thought that, this is the way that the world is going to move to over the next 10 years. And now we can see that a lot of companies are monetizing on financial services that are embedded inside their products.
What is that business model? What do you mean by they can make money on financial services? Like taking part of the interchange?
Taking the interchange, providing working capital lending, providing salary advances, payments, financing, the ability to buy a car, endless. Look at Apple by providing a savings account. Right? They're making money from the interest that people deposit their money, and they make also money. So everybody has their own angle. Even buy now, pay later. It's a credit product, right? And a lot of companies embed the buy now, pay later in order to enable purchases of their products, but actually they make a lot of money from the buy now, pay later interest itself. So at the end of the day, instead of a cost center, it turns into a profit center.
So it's interesting you start with Uber because that's such a large and marquee client. How did you land them? Like, what was your go-to-market motion to get these customers? Was it easy? It's never easy, but from the beginning, was it like, okay, we are pivoting into a platform, so we know exactly who we're going after? Or like, was there a process where you discovered kind of the right niche?
So we at the beginning, we went after all the big guys that we can because we thought that we have a chance to land one of the big clients in the long tail markets that they have. So we knew that we will never sign Uber in the US or Uber in the UK or something like this because, okay, these are big markets for them. They already have stuff. But if we'll go out to the long tail markets that they actually have a need, for example, it was Latin America back then definitely they will listen to what we have to say. And this strategy worked for us because, they wanted to grow at all costs. They wanted to go into new markets. It was clear that the payments complexity in Latin America is dramatically more complex than the US or the UK. So we basically focused on making sure that our product can provide them a service in these countries. And, we didn't go only to Uber. We actually were hunting down Rails and trying to get some other big clients. But they were the first one that we got, but we got some other big ones later.
And how did you build out that go-to-market motion? Like, what is the sales team like now?
In the early stages, there was no sales team. It was basically myself, my co-founder, and one additional person that is the current stage is the VP of Corp Dev at the company. We were doing all the sales. Like when you're a company that is less than 50, 60 people, the CEO is the salesperson, right? So you need to sell. So we were running around selling to the big clients. Later on, when we started to scale the business, we started to build sales teams that are regional. So in every region that we operate across the globe, we have a sales team. So we have a sales team in the US, a sales team in Europe, a sales team in Asia, a sales team in Latin America. Today, the sales organization is hundreds of people, of course, split between segments of enterprise sales, channel partnerships, and SMBs. And it's a much bigger scale type of operation.
Can you give us a sense of the scale of the company today? Like, what is the financial profile of the company? How many folks work in it? Volumes, things like that?
It's a company with, I think, 850 employees globally these days, around $60 billion in volume processed, around $500 million in revenue. It's a large-scale organization already.
Did you expect this outcome? Was it obvious to you when you started? How do you feel about it?
Expecting is a hard word to use, but we were definitely eager to try and do something at this scale. So we thought we're going to build something that will be in the hundreds of millions of dollars in revenue. We didn't think, of course, that it can scale in the fast pace that it did. Nobody took into consideration COVID. Nobody took into consideration a lot of other things that happened. But definitely when we started, we didn't think it's going to be a company that is selling $50, $100 million. We knew that you're going into financial services. It's a huge market, and you're going into financial services globally, which is even a bigger market. So definitely you have the potential to do $1 billion in revenue.
Can you talk about maybe some of the growth stories of the different products? Because, today you've got multiple products that you offer to the market. What are those products? And then maybe after that, we can talk about which you've seen grow the most and that are the most exciting for you.
Yeah, sure. So actually, the first product that we've built was built not even for Rapyd. It was built for the first version of Rapyd, which was this consumer financial services app that we were trying to launch. And this is the wallet product. It is a type of a white label version of a PayPal, right? It is a wallet that can store funds in 55 different currencies, includes P2P transfers between wallet owners. And up until today, this wallet is the secret sauce of the company because a lot of clients are basically coming in to buy either the collect or disburse capabilities of Rapyd just because we have this wallet and they can store funds in the wallets, and it can facilitate quite a lot of different use cases for them that are not doable without a wallet infrastructure from a regulatory perspective. I think that, when we pivoted the company to be a B2B fintech-as-a-service play, we understood that we want to build all the other services that we have around the wallet, because we understood that the complexities actually can be unlocked by leveraging this wallet ledger in the middle. And then we went into collecting payments, which is the number one revenue generator for any company in the space, because at the end of the day, you're making money of every single transaction that flies in. You take a percentage of the transaction. So payment collection was the second one, and there we try to scale it to as many countries as possible, because like I mentioned in the Uber story, you have clients that are big, you want to serve them. It's clear that they will go to long tail markets. Long tail markets are not Visa, MasterCard, Amex related. So you need to go and integrate cash payments in Bolivia or bank transfers in Indonesia. So the product scales very quickly from a complexity perspective, but it's also at the end of the day, the number one revenue generator that is probably responsible for around 60 to 65% of the company's revenue up until today. Then later on, you come in with the disbursement capabilities, because anybody that uses collected wallet at the end of the day will need to take the money out of the wallet one way or another. So you're building a disbursed product that allows them to send money somewhere, either to themselves or to their suppliers, or to pay invoices, or to pay whatever. And this product, again, you start with just doing simple stuff like, okay, I will connect to ACH or to set bank payments in Europe. But then you very quickly find yourself in a scaling product that needs to integrate to 88 different banks across the globe to do real-time money movement locally instead of using networks like Swift. So every product had its own accelerator. It's something that pushed the nitro button to move the product faster and to move the revenue. But at the end of the day, if you look at the product that is the biggest one from a revenue perspective, it will be the payment collection piece.
So let me ask just a naive question about the wallet and the payment collection piece. Like, how does it work? Do you have bank accounts in every single jurisdiction, and you are essentially creating your own network, like a mirror to the correspondent banking network? Is it e-money? Like, what is the ledger? How does the thing work?
So it is e-money, first of all, and it is a digital ledger that we save inside our system with your balance, but the money is stored in one of the 88 banks that we work with, right? So we have e-money licenses, we have bank accounts in a variety of currencies around the world. When money is deposited into the wallet, it is deposited in one of these bank accounts and is reflected inside the wallet ledger. Of course, you can deposit the money in as many bank accounts as you want that we support, but at the end of the day, you will see it as one wallet ledger inside the Rapyd platform, and we basically, mirror it there. And from a regulatory perspective, we're of course obligated to report on the e-money that we store based on the jurisdiction that you came from. So for example, if you're a UK citizen, it will be based on our e-money in the UK. If you're in the EU, it's another license. If you're in Singapore, it's a different story. But at the end of the day, it's mirroring a lot of different bank accounts into a single ledger.
What was it like to get the regulatory approvals in all these jurisdictions? For any one in particular, there's no guarantee you'll get it, and it can be a 2-year process. How were you able to get through that?
So these days, by the way, it's much more complicated than what it used to be. So when we started in 2017 to get regulatory licenses, it was a little bit easier because there were not a lot of companies going after e-money licenses. Today, it's like the most requested thing, I think, in every regulator across the globe. But the first several licenses that we got were not that complicated to get. So we hired a consulting firm. They basically work with our chief compliance officer to write some processes, create the documentation that is required, and create the internal groundwork, for compliance governance. And yeah, it took time, right? It took in one story, a year and a half. But these days, of course, it's much more challenging because a lot of regulators, they have piles of applications of e-money licenses, and everybody wants a license like this these days. So now it can turn into a 3-year, story where you actually need to go through endless number of meetings with regulators, explain business models in much more detail, and it becomes a big task. But I think in the early days, really between 2017 and 2020, our ability to get licenses was easier than what we thought, but still it was a year to a year and a half process in each jurisdiction.
So you mentioned that in many of the places where you operate, it's too far for Visa and MasterCard. Can you expand on that point? Like, do you bump into them at all? Do you see them as part of your network, as competitors to you?
They are part of our network for sure. We are a principal member of Visa and MasterCard in several jurisdictions, and we process a lot of payments with Visa and MasterCard, but around 40% of what we do is not Visa and MasterCard. It's based on what we call alternative payment methods, which can be a bank transfer, it can be something else. And at the end of the day, we learned over the years how to partner with Visa and MasterCard, and they learned how to work with us. We need to understand that in some countries, there will always be Visa, MasterCard 90% of the transactions, and in other countries, it will be only 10% of the transactions, right? So every country has its own thing, and I think that what we as Rapyd learned is that we have to be diversified enough, from a payment acceptance perspective to operate in as many countries across the globe.
And then reflecting on the point about how many applications there are for e-money licenses, do you feel that the market is overdoing it? Is it oversaturated with this theme? Why is there so much demand, and how does it reflect on the market as a whole?
I think there is inflation, in the number of companies that are trying to get e-money licenses. It started in 2021. It's still today, there is a huge queue. But it's also because the regulator really wants everybody to get regulated, and the regulator stopped being interested in companies to basically either white label somebody else's license or become an agent or whatever you want to call it. So it's pretty much a chicken and the egg story. The regulator pushed everybody to get their own license, and then everybody pissed the regulator by trying to get too many licenses. So it's not clear, how the situation is going to be resolved, but there is definitely, an over attempt to get licenses.
Having so much volume that goes through the platform, it must give you a view into the health of global commerce, and the different parts of the ecosystem that grow are probably very interesting signals. What is it that you see right now in the business in terms of what kinds of companies are growing, are processing more volume, are doing well? What kinds of businesses are hitting a wall or struggling more? Sort of what is the economic story that's coming out of the flows that you empower?
So what is shrinking, by the way, and shrinking big time over the last 18 months is everything that is related to online trading platforms similar to Robinhood, right? So there were a lot of companies in 2021, beginning of 2022, that were trying to become a new version of Robinhood or the Robinhood of whatever, Singapore, Indonesia, whatever you want. This is like a business that is tanking, right? Because people stopped investing in the stock market because of the losses. And these volumes shrink dramatically, like it's been tanking over the last several months. What still has a very good growth rate is, of course, things like food delivery that, even post-COVID continued a nice growth, and, they're doing good numbers. And some of these businesses even found the good unit economics that they can make money, and it's not a money-losing business like it used to be. I think that there are quite a lot of digital goods-based businesses that are, starting from like streaming of music to a lot of other things. It became very popular, to consume digital books, the music and everything online. So the digital goods space continues to be a good trend.
Is that where you're investing more? How do you see the evolution of your product with where demand is going?
We invest in what we call marketplace structures, because at the end of the day, what you see is that almost any business on planet Earth is operating in a marketplace-like structure. So even Amazon, right? There are the things that Amazon sells, and there is like Amazon marketplace sellers. So you need a very specific payment infrastructure in order to be able to support marketplaces when you operate with them. And it's a very tech and product-oriented thing. Starts from automating a lot of compliance risk and transaction monitoring capabilities, going forward to being able to do wallets and disbursements for marketplace scenarios. So we make a lot of investment around that because we see a lot of businesses that are marketplaces. It doesn't matter if you sell shoes or if you're trying to sell watches, or if you're doing even cloud kitchens, which is also a type of a marketplace. At the end of the day, the use cases from a tech perspective in payments are pretty much the same, and the product needs to be able to support it.
I guess in that way, it goes back to eBay and PayPal, or Alibaba and Ant Financial.
Exactly. There is no difference. That's the story. The only difference now is that the regulatory requirements became much more complex. So the default way of PayPal working with eBay or Ant Financials working with Alibaba is not enough anymore.
Are there companies that you look at that you admire and have lessons from that you're applying?
Yeah, there are a lot of good companies in the world that you can learn from them. I think, specifically in fintech, I think Stripe is a great company, and you can learn a lot from the things they've done for the good and from the bad. And, we're trying to learn from other companies in the space, especially from failures, because we're trying to avoid the same failures. And it's clear that, when you're building a company, at the end of the day, you will stumble into the same problem somebody else already stumbled into. And the question is, will you be able to go around it, or how fast you will be able to fix it? And we're always trying, to understand what other companies have done in similar situations.
That's an interesting line of thought. Can you talk about some failure modes for fintech that you've recognized and are working to avoid?
Let's start with the number one failure in fintech, which is basically the ability to onboard SMB clients, right? In fintech, at the end of the day, you can't build 100% of your business on enterprise if you're now new in fintech. Yeah, Adyen did it, but they started in like 2004, 2005. But you have to have some kind of a level of exposure to SMBs. And I think that in SMBs, everybody makes the same mistakes. From an onboarding perspective, they think that SMB is this nice, cute animal that can be a client of yours, but then it turns into this angry, evil shark or whatever you want to call it that is going to create losses and damages for your company, because there are a lot of fraudsters and a lot of bad people around the world that are leveraging basically fintechs or financial services systems in order to either steal or to do money laundering or whatever it is. Everybody stumbles into them. Everybody has these same challenges. It's very important to try and operate in the right way, because what you think is a very good market and you think that it's a lot of risk distribution to a lot of different people, at the end of the day, it blows up in everybody's faces and everybody stumbles into this problem.
That's an interesting one. I guess you have to open up an SMB channel to learn it. I think it was it Brex that made this mistake where they opened up an SMB channel and then walked back on it?
Yeah, not only Brex, by the way. A lot of companies in the space did the same mistake with going big into SMB and understanding that the time and energy that you spend on SMBs will never pay back. Not from a unit economics perspective, because you need to invest a lot in customer service and sales and onboarding, and you don't take into consideration the fraud rates and the losses. And I think that except of Stripe, that was able to maintain, at least based on what they say, for a very long time, a good SMB business, almost anybody that went into SMB failed.
What are some of the other failure modes that you've seen?
There are a lot of tech failure modes, which are the nitty-gritty details of the platform. But I think that, everybody thinks that they have the best engineers. Everybody thinks that they're able to build something that nobody was able to build. And at the end, all the engineers fail exactly in the same place, which is processing a lot of transactions at scale in cloud environments. So it's funny, but sometimes this cloud infrastructure and everything is related to microservices fails you in payments, because in payments there are a lot of times a requirement to process a payment as fast as possible. So you cannot allow the payment to jump between different services that are part of cloud computing. Every engineer thinks, oh, no, we're going to do it. But most of the engineers do not come from payments. So they think they're solving a problem that can work in a cybersecurity company or in a gaming company. But actually in payments and financial services, it's a little bit different. Everybody has these problems. It's always this group of engineers that think they can do everything better than everybody else, and they don't want to learn from the mistakes of others. And then you roll back and start, actually doing things a little bit more like others in order to avoid this problem. So basically, high velocity of payment processing in the cloud is not as simple as everybody thinks it is.
It's interesting the examples you give, because the one for me that sticks out is the overexcitement during COVID and overinvestment in hiring and kind of aggressive expansion. And then over the last year and a half, a pretty severe contraction across a lot of fintechs, kind of like a big strategic direction error. Is that too basic of an error for you to worry about? Or how do you think about sort of the COVID acceleration and then the reversion back to the normal?
Everybody made the same mistake, but it wasn't a mistake. That's the story, right? I think the newspapers or whatever, reporters, they like to say, oh, they made a mistake, they hired too many people. But at the end of the day, when your business is growing, and you know that you need more people, there is not a single CEO on planet Earth that will say, you know what, I'm not going to do this growth. I think that, this COVID thing and this revenue that is coming and all these clients, we need to start telling them no because I don't want to hire people. Nobody does that, right? Nobody can be in this mindset. So everybody made the same mistake by thinking that COVID will remain here, or at least the impacts of COVID will remain for a longer time. And they hired people while the business was growing, and then COVID ended, and then the behavior of people changed from online back to a little bit more offline. Okay, fine. It happens, but it's like, I don't think anybody would have said no. And I don't think that anybody actually had an ability to take this growth that came in 2020, 2021 without hiring people. You could have hit the brake of stopping hiring a little bit earlier, but nobody has a crystal ball also. Nobody knew. So I think that nobody will say no to growth, and nobody has a crystal ball to know that when it's going to end.
What's your outlook then on the financial recovery of the sector, not necessarily the operating recovery? Because I think that for many of the companies in the space, at least the large names, like operating performance is fair and improving in many cases. Like lots of companies continue to grow and put up better revenue and get to profitability and things of that nature. But the IPO window's closed, all the SPACs are severely hurt, fundraising and ventures down, and capital is hiding and kind of licking its wounds. What does the financial recovery of our niche look like? And is there any impact on you from that?
There is an impact, right? Or that investments are down, and the capital markets were closed up until several days ago. But we're recording this after the ARM IPO and after the Instacart IPO, and up until today, at least in the last several days, there is a lot of good reactions to these IPOs. So I think that this is the beginning, basically, of the change. I'm not saying it's going to change overnight, and next week everything is going to be great, but I think that the momentum that needs to start from something, I think these two IPOs will definitely start the momentum, and hopefully in the next 6 months, it will be the time that everything will change back to a mindset of, okay, we need to start investing, we need to start growing again, and the interest rate will start to go down at a certain stage, hopefully sometime in Q1 24. And then basically it will start another cycle. Now, I'm not saying that the cycle is going to come back to what it was in 2022, but at the end, every cycle starts with something, and hopefully, we're in the beginning of something that will allow the majority of the companies to start thinking about growth and not only about, I need to save my cash because the world is coming to an end.
I want to switch tracks and ask about one more trend, and that's, the increasing technical literacy of the world, that there is sort of a power shift from financiers to developers. And, your company is one of the best kind of symptoms of that shift. And distribution strategies have gone from how can I sell to the business to how can I package things to a developer so it's easy to work with me, so the developer becomes my representative and my advocate, kind of bottoms up. Can you talk about what you see across developer communities, what role developer communities play for Rapyd, and any activities that you do to catalyze that?
So first of all, there is a need to understand that developers became integrated part of a buying process of something in every organization. Because almost every product that you buy at the end of the day has an API, and you want to automate something there, right? In the past, people just bought a system that was installed and finance was using it, and that's it, right? Or whatever, sales was using it. Today, almost any system that you buy, which it doesn't matter if you're buying it for finance, sales, compliance, customer support, whatever you're doing, has some kind of an API and somebody wants to integrate to it. So there is always an engineer that is involved in the selection process of any product inside the organization. And the understanding over the last several years is that you have to basically educate this potential buyer, the engineer, to be your champion inside the organization. So there is a need to talk to these people and make them understand your product and also your strategy. But the big thing is that these people are not the type of people that you sell to. Engineers are not people that like marketing. They don't like to buy stuff because somebody gave them an ad. They want to buy stuff because they think it's good, because technology is interesting for them. It's a completely different type of marketing. It's a completely different type of a relationship building process. And I think that we've learned over the last several years to really build relationships with developers by building a developer community, by doing a lot of developer-oriented campaigns and meetups and events. We invested heavily in a developer relations business unit that basically provides tailored documentation and code samples and a sandbox environment to the developers. Because at the end of the day, if the developer doesn't think that your API is good or they don't think your technology is good, they will have a seat around the table in the decision-making process. And even if the CFO will say, oh, the prices they gave us are the best, let's go with them, the developer can always say, yeah, but the code is not good. It's going to take me so long to integrate to them that is going to be more expensive because I'm going to spend so many hours doing it. So let's go with the other offer that is a little bit more expensive. And today, people listen to the developer, which used to be that we are a person that nobody cared what he thinks. Today, they listen. And I think that it's very important for almost any company on planet Earth, because everybody has APIs, to understand that, investing in developer relations is a critical task in order to scale your revenue.
Well, this has been a fascinating conversation. I've learned a ton. If our audience wants to learn more about Rapyd or about you, where should they go?
So in order to learn more about Rapyd, it's rapyd.net, our website. And we have also access to our developer documents, to our online documentation for product managers, and also a sandbox environment where you can simulate quite a lot of things. And about me, either LinkedIn or the Rapyd website.
Fantastic. Arik, thank you so much for joining us today.
Thank you very much for your time.
Hi, everyone. That's it for this week's episode of the FinTech Blueprint. For more technical deep dives into all things fintech and decentralized finance, check out fintechblueprint.com and grab a free subscription to the newsletter. This is Lex, and I'll see you next time.